Blake. How you doing?
Hey, good morning, Paul. How you doing?
I'm doing real well.
So hold on, I'm just adjusting, putting my name in here. Um, so what you looking at this morning?
Well, we've had that. I told you yesterday I was looking for a short-term swing high in the dollar, and that actually came to fruition. I thought that the FOMC statement would actually come in bullish, and if it came in bullish, I didn't care. I was going to be buying the euro dollar because, like I told you before, all the good news is out there for the bulls. There's nothing left until you come to the FOMC statement. That's why I thought that I would see the dollar put in a short-term swing high, and then you'd see what I was doing was buying the euro dollar. Actually, was long the dollar going into the FOMC statement, and I just happened to be in front of my screens when Bloomberg leaked it, and I still didn't even realize they leaked it. I just covered my scalp, thinking, okay, that's a nice quick 20 some pips. And then I'm looking like it's still moving. It turns around and starts moving high. I'm like, what the heck's going on here? And I look up, and sure enough, the headlines are rolling down Reuters, and obviously all hell breaks loose. But we flipped it, and like I said, I'm looking for a move to last about a week to maybe 10 days. But on this run up, 1189 is going to be a little bit key here. If we get above it and close below it, then we can see the euro dollar pull back towards the 1142-ish area, but this market's on a buy. I can't understand why people are talking about fading this market. It's too early in the move to be fading it unless you're just scalping it.
Fading the euro?
Exactly.
Yeah,
It's crazy.
Something I've been planning on doing, and my focus isn't on the dollar right now. I've got my only dollar long is a dollar Swiss long, and it's basically down 20 pips. It's just and actually I reduced my position size yesterday. My focus is really on the crosses, but you look at some of the euro crosses, like the euro pound. It looks extremely bullish right now, and then you got like the euro Aussie, euro Swiss looks solid, like it's going to bounce. Those all suggest that the euro is going higher. And then, but if you look at the dollar index, the dollar index is still in a big triangle, and it's something that I said a couple of days ago, which I'm still planning on, is the dollar index in this triangle. I just want to buy it at the lower end of the triangle. So that takes us about down to 95 in the consolidated, because I still want to be long ahead of the September meeting, and I'm not buying you a case of beer until after the meeting. So just but I think that the dollar has the ability to pull back into the lower end of its triangle, and that's where I want to get long. I want to really position myself long there in the next 2 weeks. So hopefully, if we get down there, I'm just hoping it doesn't take the dollar Swiss with it, because the dollar Swiss could theoretically stay higher as other Swiss pairs move higher.
Exactly.
So I'm not worried about like the euros, the dollar Swiss. It may come down a little bit, but it's not one that I really fret about too much. But I look at like the euro. I think the euro could race up to 113. The cable obviously is having a hard time going down, so that can stay elevated too. Dollar yen could come down. I just think the dollar index still has some downside in it, and I want to be a buyer on a dip. So I'm just waiting patiently for the dip.
95.38 is going to be the 61%. And
On the dollar index?
Yeah, right here. I've got it here on the screen.
Yeah, I've got it. I'm looking at the same thing. But that's not what I'm not. I'm looking a little lower than that. And
this 94.98 looks pretty. Well, actually, I'd say you could stretch it all the way to 94.77 is a good target. Right here, 94.77. You've got these touches right here. You look at this. See this zone right here? All these touches right here?
I'm not looking at your. I'm sorry, I'm not looking at your screen anymore. I switched it over, but you can see this is the. It's about where you're looking at. I mean.
94.77.
Yeah, right here. This is the it would be the triangle bottom somewhere in this neighborhood. Depending on how if we when you're drawing these, if you want to be symmetrical, we might actually stop at the 618. But I am going to be a buyer as soon as we get towards 95 on the dollar index. So
I'd be the same thing. That's what people miss the point. I keep telling people is I was saying that today or pointing it out is I'll be a buyer of the dollar there too, because then it's going to flip, because then you still have to factor in the risk that maybe they do hike. But it's the same thing that I tell people. Conviction is a great thing, but you have to look at at least to me, the way I make money is how I believe the market is positioned and how it's going to move over the coming days. And I told people I dragged up, and why I said you would see a dollar unwind because it's truly overdone. And I brought up the same, and the perfect example I brought up, which I brought it up before, was I remember, I always think that the euro sucks as a currency and the whole zone. And I remember selling the euro big time at 132.5 and loading up all the way up. And here goes the euro all the way up to 139.93. I essentially go and get run over. You get short, and that was at the time of the ECB meeting, not this last June, but the prior June, and the market comes down. So you made a ton of money. I remember you were getting long at around 134, 135, because I was on the other side of the trade, and you rode it up for a pretty good chunk. So ultimately, guess what? Ultimately, I was right. But guess what? I lost money. You went long, and you made money, and you got short near the top, and you made money. John Taylor got short at 125 and caved in at around 133.5 and lost $7 billion. You don't make money with your conviction. You make money on how the market's positioned and the perspective of the market. You make money with your conviction at certain turning points when you can go in and define your risk. You're a perfect example of the person who's nimble enough to trade it that way, and I'm the perfect example, along with John Taylor, I guess I got some good company, of a couple of bozos that were so stuck on their conviction that they knew more than the market. The thing is, you may be right about the market, but the market is right in the short term. It's how it affects your P&L. So here I was right on the euro all along, I lost money. Here you were long euro from 135 to around 139-ish or 138.5, and you made money. You shorted near the top, and I can tell you that day I caved in on my shorts. I caved in my shorts. I couldn't take it anymore.
Really?
Yeah, because I was so frustrated. But that's what I'm saying. Conviction is a good thing. So it's not like I said. People might say, oh, let's say they raise in September. You're such an idiot. You said that they weren't gonna raise. No, you're the idiot, because I traded it in the direction how once the FOMC released it, I played the euro from the long side, and I'm going to be playing the dollar from the long side about the same time you're going to be playing, because I think then at that point then the market's going to go in and say, hey, there's a risk that they may go on and raise. I'm arguing from a standpoint that they shouldn't. But ultimately, it doesn't make any difference on whether I'm right or wrong. It's how you play the game.
Okay, so you said a couple key points there, Paul. And now, first of all, you're right. Conviction's not going to make you money. Conviction or bias is important to have. I mean, it's important to have as a trader, because my opinion is you can make money in either direction. It's going to be easier to make money in certain directions, but you can make money in either direction. So if I'm a persistent dollar bear, and I'm looking at this chart, and I'm a persistent dollar bear, that's fine. I'm going to be selling into strength, up here, maybe right here, targeting right there. Fine. If you're a dollar bull, like me, I'm going to play here. Let me delete this stuff. If you're a dollar bull, then you want to play, the dollar long off of the support levels, false breakdowns, and like right here, this is like where I plan on being long, and you just you time your entries, your technical prowess, how you read the charts and how well you read the charts will shape the way you trade your bias. I mean, if I a great example is the Aussie dollar. I guess the Aussie is probably one that I could really, just because the way I've traded it over the last several years, everybody should know this that's been here for a long time. If you go to the Aussie dollar, anytime we're up near 105, I'm short. Okay, so we were up near 105, I'm shorting it. Up near 105, I'm shorting it. Up near 105, I'm shorting it. Up near 105, triangle pattern, we break down, I shorted it. It it was like I wasn't sure when it was going to actually break down, but I knew it was eventually going to break down. Okay, and and then just trading it to any rally that we got, any significant retracement, I shorted it again. Anybody that was listening here trading the Aussie with me over the last couple of years have made, if you traded it like I did, you made a lot of money. And it's not like I can't make money on the long side. No, I could, but that's not my bias. My bias is to trade in the direction of the trend. Same thing with the dollar index. It's like the dollar index is bullish. This is a bullish chart. Now, it doesn't mean it's going to stay bullish. I mean, we break through this trend line support, it's going to turn the chart bearish, and then I'm going to have to shift gears. But it's bullish, so I'm going to buy it on dips. And going into like the plan of attack, which I'll reiterate for me over the next month, it's real simple. I expect the dollar to come down over the next couple of weeks. I want to be a buyer. I want to be a buyer. You're right. People are going to say, well, how about if they do raise rates in September? Right. And then what we're going to do is we're going to end up going mid-range. It's going to be the September meeting. We're going to be right here, right where we're at right now.
Mm-hmm.
I would assume. That's how I'm going to trade it. I bet you we're right here between now and September. Today, or because of what happened yesterday, dollar is going to weaken a little bit. Everybody goes, oh, maybe the Fed's not going to raise rates. And then we get towards September, as long as the data is not completely crap data over the course of the next couple of weeks, people are going to start saying, well, what if they hike in September? And then it's going to bring us right back to mid-range. And then from here, we're going to do this in September. And hopefully we do this if I'm long, and we position ourselves correctly for that type of move, then great, and if not, it's going to come back down. We got to do it all over again. But you trade into a bias, and you use your skills that you develop technically, how to enter a trade, and hopefully get yourself some, position in some nice prices. And you're right, you use a lot of positioning to do so, and which is obviously very smart for you to do.
Well, one thing I have to say, I think a lot of people here on the webinar would appreciate is your long-term outlook. I was with you with the Aussie dollar, and I was selling it like crazy at 103, 104, 105, back and forth. And I stopped being with you at 98 cents. There was no way I saw it going to 80 cents. And you kept saying 80 cents. I go, I don't know how, I see what he's talking, I just don't see it. And sure enough, it obviously went beyond 80 cents, but it went down to 80 cents. But like I told people, I guess there's a lot of ways to trade. I mean, I obviously can be quite opinionated, and maybe I tick a few people off or whatever. But the way I trade is I trade by, and I mean, you called it perfectly. I'm saying, but the way I trade from day to day or whatever, I trade with perspective, in the sense that what's the narrative of the market and so forth. And we were right on with that Aussie dollar all the way to 98. I didn't see the bigger picture, things unwinding like that. That being said, I like the way I gravitate towards the way you trade. I don't believe in all those monkey patterns. And there was one big trader, I'm not going to say that his name. He was into fractals, and he was looking for 110 on the Aussie dollar. And that guy was so wrong, it wasn't no funny. I don't believe in all that gizmo, stupid stuff, fractals and all that other junk. The market moves on perspective, and so people draw these stupid dog patterns, and they think it's going to go there. And then when it doesn't go there, they go, well, it's not a dog pattern now. Now it's a monkey pattern. And the market, like I said, you can trade the way you want. I'm talking about people in general. I say the markets move because of positioning. Like you said, too many people loaded on one side of the boat. And that's what I thought was happening at the FOMC with the dollar, and the way the euro dollar, when it took out 1058, it didn't accelerate. It stayed between 1058 and 1020. So that's why I thought it was getting tired, and it was setting itself up for a reversal going into the post FOMC. Had nothing to do with monkey patterns, had to do with positioning and the thought that the perspective of the Fed was going to change, where the market would have to reprice it in. But that's all I got to say. But you had a fantastic trade on that Aussie dollar.
Thanks, I appreciate that. Patrick said, "Man, this look at the peso." And by the way, you know what's really crazy? So if you're watching these emerging market currencies, I mean, look at the peso. I mean, I mean, look at that thing. Go ahead and try to stand in front of that. Let's take a look at the US, USD, TRY. Let's take a look at some of these. I mean, look at these, Paul. Turkish lira
Yeah, and today the Kazakhstani tenge dropped
lost.
25%. 25%, 20, because they said it was kind of funny. I saw what Jeremy Cook said on World First. He was saying, it reminds me of the what's his Gunga Din or whatever that guy, not Gunga Din, the Australian guy with the big knife up.
Crocodile Dundee.
Yeah, he goes in relation to the Chinese devaluation. He goes, this isn't a knife. This is a knife. He goes, well, that's not devaluation. This is a devaluation. The Kazakhstani tenge dropped 25% last night. It's not all these people say, well, you don't trade these currencies. My whole point is that when you look at these currencies in the bigger scope of everything, that's why the Fed is not going to go and raise in September. All this stuff is going to eventually make an impact on U.S. corporate profits in the fourth quarter. That's why the Fed wants to see more traction and more wage growth to dampen the effect that we're going to see, dampen the effect to the U.S. economy, and they're doing the right thing and wait until December. Whether or not that happens or not doesn't matter. I'm trading it in the direction that they were going to have to go on and lessen those risks, lessen that percentage, which gave the euro dollar the big boost. And I'll be buying the dollar with you in about another week and a half or 2 weeks.
All right. Well, I'm hoping to. The thing is you keep watching, and I just need to take a quick look at the U.S. dollar versus the INR, ZAR, TRY, MXN, etc. Scary moves. Just for people that aren't. Just for people that aren't really looking at these currencies, man, the dollar is like a runaway freight train. It's interesting. I wonder if that's gonna make its way into the rest of these majors. The majors are very much just ignoring a lot of the movements against these emerging markets, but man, emerging market currencies, but crazy ass moves.
Well, it's hurt the S&Ps, and that's why on Monday and also on Tuesday I said, in a lot of global events, the S&P, the SPUs are rich up here at 2,100. Market still kept on trading at 2,100. Now here we are, nearly 50 handles lower. I'm just saying, you have to look at the bigger scope, and I don't want to keep belaboring that point, but I will mention it one last time. These stupid monkey patterns don't tell you that it's going to 2050. It's the real news and the real perspective, and the money flows.
I think when you say monkey patterns, are you talking harmonics?
Yes.
Oh, okay.
Along with fractals. That's
first of all,
the way something looked, the way okay. I see people take pictures of buildings. They go, that looks like the dollar yen from eons ago.
Okay, so first of all, let me clarify a couple of things. Fractals usually is what most traders. Fractals I've heard it used in a couple of different ways. Yeah. Fractals as far as like repetitive natures of chart patterns. So like I could look at a chart of 1932 euro dollar and then look at today's euro dollar and go, look, they're the same patterns. That to me is more of like coincidence. I could say, I could pretty much go, hey, look at that guy. He looks like kind of like that guy. They must be brothers. It's like,
exactly.
But they're not brothers.
They're not.
And just because they look alike doesn't mean that they're going to act the same. One could be a serial killer and the other one's a kindergarten teacher. So it's like that stuff to me. It's hard for me to get behind it as far as an analysis goes. Now, monkey patterns, or what I like to call harmonic patterns, I actually I'm a fan of. I'm not super sharp at finding them. I've surrounded myself around some pretty good people that are good at identifying them. But the reason why harmonic patterns work so well, in my opinion, is because they're a culmination of fib levels in certain pattern environments, which as you know, I'm a huge Fibonacci fan, and
That's
especially if I
what
can close.
exactly. And if
But
anyone's seen,
that's a harmonic pattern, Paul.
well, not to interrupt you, but I'm saying is if people haven't missed your webinar, it's a paid webinar. It's only $30. That's how I got tuned into Fibonacci, and that's my big beef with harmonics is because they act like it's the end all, and all it is Fibonacci on top of Fibonacci on top of Fibonacci. What they should be doing is every time they mention harmonics, they ought to be given like a royalty to Fibonacci because they never mention Fibonacci. They basically, and the other thing is I have a problem with harmonics is if they go, it's going to be a crab. It's going to this price. But if it doesn't, if it goes past that price, they go, oh well, that means it's going to be a deep crab, or now it changes it into a butterfly. That's all a bunch of gunk.
Well,
Because, I mean, to me, I just like I said, if something works, it works. They
but
act like it's the holy grail, but it's always changing. If it doesn't go here, then it's a new pattern.
well, you can say the same thing about fibs too. I mean, it's like, okay, if it stops at a 618, that's where it should stop. But if it doesn't, it's going to a 786. Well, it's
No,
the
you
same.
take it in, you take it in, like what you like to say, I always picked up that term from you, the confluence. You look at the confluence of levels along with the fib. The fib in and of itself isn't going to go in and stop the market. It will slow the market down. It may even create a turning point. But you look at the confluence of a level, support or resistance with the fib, and that increases your probabilities. So Fibonacci doesn't say definitively it's going to stop here, definitively it's going to move here, but you use that in conjunction with your levels. With harmonics, they say essentially it's going to go there and it's going to stop there. And if it doesn't, oh, you were wrong, Joe. I know, but that means now it's going to be an upside down what you would call upside down dinosaur pattern. And to me, I just think it's crazy.
Okay, now we could go around and around and around, Polly. But anyway, well, hey, you know, Paul, you know,
Yeah.
one thing I love about you the most is you're very unfiltered, and you call it like it is, and I love it, and I love your passion, and that's the one thing I can appreciate most about you, and obviously you're really good at identifying really key levels in the market. So I appreciate you so much. We could sit here and we could.
Yeah.
I'd have to go break out
Well,
a case of
exactly.
beer, but it's at 4:20 in the morning right now, and I
A
can't
little bit
drink
too
beer
early.
this early. So,
Oh, I
all
have a
right,
good
Paul.
one. Also, 1189 is a key level on the euro dollar on the 30-minute chart. So if we get above it and then we close back below it, then we'll probably come back down to 57 and 42. So that's
Great.
it. I'll talk to you
Thanks,
later.
buddy. All right, man. Have a good one. All right. Good morning, traders. This is Blake Morrow. George says, "Wimp, it's 5 o'clock somewhere." That's right. It's beer 30 somewhere. Gosh damn it. If I was in Australia, I'd be drinking right now. Anyway, good morning, everybody. Hope everybody's having a great trading session, or good afternoon, good evening, wherever you're at. For those of you that are in the somewhere in the Pacific, hope everybody's having a great trading session. You know, I don't do this often, and so I'm going to do it tomorrow.